Sam Laprade Show continues on City News.
101.1 FM and 1310 AM.
And we're back on City News. I always catch up with Clinton Wilkins from Centum Home Lenders Ltd. on these big days for the Bank of Canada, and today is no different. Hi, Clinton.
Hi, Sam. How are you?
Good. We were watching with bated breath. Many people holding their breath in this country, knowing that interest rate was probably going to get hiked today, 25 basis points, bringing it to 5%. This wasn't a surprise, though, Clinton.
No, the economists were certainly projecting that we had some room for another increase. And Sam, I think with the job numbers that came out here just a few days ago, it was evident that there was going to be an increase. There were 60,000 new jobs added in Canada, and really the economy is still chugging along at a pace that the Bank of Canada is not comfortable with, just due to this level of inflation. Some positive notes, with last month that the inflation numbers were certainly down a bit, but it's not where they want it to be. I think the big concern here is we haven't seen the full effect of the previous increases. The Bank of Canada just wants to start slowing the economy more than it's slowing right now.
Yeah, for sure. Let's just take somebody, for instance. Let's just think about a client that you might have, Clinton, that is kind of reeling right now. Maybe they're in a variable and their mortgage payment has just gone up again for the 10th time in 18 months. What advice are you giving them, Clinton?
Well, we're at 22-year highs now, Sam. And, the key overnight rate has not been this high since March of 2001. So we're certainly in a challenging time. I think that if you're in a variable rate, you need to think about it. You need to really think about it. Is this product going to be right for you? If you're starting to feel some financial pain, I think that you really need to start asking for help. I think talk to your lender, talk to an unbiased mortgage professional, and really start figuring out what the best solution is going to be to weather the storm. Because right now we are in a storm in terms of interest rates, and it's not just clients that are in a variable, Sam, that are feeling the pain. We have lots of clients that are in a fixed rate that are coming up for renewal that are really starting to feel the pain because, as you know, rates are really high across the board. So some customers are looking at longer amortizations. I can tell you that's very, very popular. We have a lot of clients that at renewal or even midterm are looking at extending their amortization to 25 or 30 years. And they understand that obviously they're going to be paying their mortgage for a longer period of time. And really what we're hearing is they want to do this for the short term while the rates are high. And then once the rates soften again, start reducing their amortization.
Mm-hmm. I know it's hard to sort of have that crystal ball, but are you seeing that in the next 2 years, 5 years?
I think rates are going to be high all year, Sam, and I think going into 2024, the rates are going to be high. There's already signs that a recession is, on the horizon. The rates will certainly soften once we get into a recession-type situation. When that will be, I think it really is going to be impacted by what is going to happen with Canadians. We were home for 2 years, really not spending any money, and then a huge amount of capital entered the market, and inflation really became a runaway train. What the Bank of Canada is really saying today, Sam, is we need to stop spending, and that's going to help slow the inflation. And I think some people are going to stop spending because they don't have any money. There's only going to be so much access to credit. And I think the people that are being impacted are really the middle class. The lower income folks, they're not borrowing money because they don't have the access to credit. And I think the individuals that are on the upper end of the spectrum in terms of wealth and income, they're not so impacted by the rates. The people that are really impacted are you and me. We're working class, and we're certainly seeing an impact. Mm-hmm. And I think everyone's going to be impacted, and it's not just homeowners, Sam, that are being impacted. Obviously, if you're in a variable rate mortgage, either your payment is going up or your amortization is getting longer. But if you have a home equity line of credit, obviously your cost of borrowing is going up. Or if you have any other debt products that are tied to the bank prime rate, your cost of borrowing is going up. So a lot of people are being impacted, Sam, not just people that are in a variable rate mortgage. And we need to also remember that customers like businesses are being impacted. Their access to credit is being impacted. So certainly there are going to be some repercussions. And I think that now the Bank of Canada's taking the rest of the summer off. They're not meeting again for now almost 7 weeks. The next meeting is the first week of September 6th, the first Wednesday in September. And a lot of economists think now we're going to be in a plateau situation. We thought we were in a plateau situation a couple of months ago as well. But what happened with inflation and what happened with the job market really forced the Bank of Canada's hand into another increase.
Yeah, it's I think about this pandemic and if I can sort of branch out a little bit from our conversation to think about families that, maybe had a job loss, maybe there's a separation in the family. There's been so much going on because of the pandemic, and then layering on all these financial pieces. I'm sure you're having a lot of conversations with people that not only have conversations at the kitchen table that are difficult about finances, but it's layered on so many other pieces here, Clinton.
Certainly, and Equifax and TransUnion have put out some writing recently that they're already starting to see some cracks in the Canadian kind of credit profile. Canadians are starting to miss loan payments, maybe not so much mortgage payments. Normally, Canadians are pretty good at making their mortgage payments, but there's some loan payments that are starting to go into arrears. So the cracks are already starting to show. And I think we're in a situation now that we really need to focus on the needs versus the wants. We really need to look at our budget and figure out, how can we weather the storm for the next 6, 12, 18 months? What is that going to look like? Can we sustain at this level going forward? And I think it's a really important time to look at that and really try to minimize your output. And I know that's tough because a lot of people have obligations that they're committed to and things like this in terms of, loans and cars and things. But I can tell you, I have clients that I have on social media, for example. I know that they're in a fixed rate at a very low rate, and I see them going out and leasing new cars and going out to eat all the time. And I know people don't want to necessarily change their lifestyle, but I think we're in a situation now, and I think many people are starting to feel this, we need to really worry more about maintaining and maybe giving up on some of the wants. Mm-hmm.
So it's such a tough conversation, and especially at this time of year, Clinton, people might be planning a getaway and maybe having to, as opposed to going away for a week, maybe it's just a long weekend, trying to make those decisions, but also live because we were confined to our homes for a couple years. We hadn't
been living, and that's why we really wanted to live. And I'm hearing from customers, and they said, normally when I went on vacation, I would spend $200 or $300 a day, and now going on vacation is costing $400 or $500 a day. So it's everything, really impacting the bottom line. And I think the really, big thing, aside from obviously mortgage interest, the cost of fuel is very high. The food insecurity and the food cost is a big concern. So we're certainly, I think, feeling it from every angle. And, we're starting to feel the impacts of this high inflation. And, income obviously is not pacing with what's going on with inflation, and there's less dollars for a normal household to really put out every month.
Clinton, I know we'll speak on September the 6th. We already have a date, you and I.
I know, we already have a date, and we didn't have our date the last time around. I think maybe you were off for a week or so. So I'm looking forward to September 6th, and I really wish all our listeners a good summer. And I don't want it to come on and just be the bearer of bad news, but I think it's really important to look in the mirror and figure out kind of what the best plan is going forward.
Yeah, realistic talk is important today. Clinton, thanks for your time always.
Thanks for having me.
Clinton Wilkins joining us today, Centum Home Lenders Ltd. We appreciate his time. We always speak with him, of course, on these Tiff Macklin days, also known as the Bank of Canada days. We appreciate his time.